Hello guys, welcome back to our value investing channel. Today we are going to discuss about a company that has been able to do this. Revenue of the company went up from $250 million in 2019 to $600 million in 2021. So it's more than double in just 3 years. What are now expectations for this company? Will be the company able to make another double revenue in the next years? This is what we are going to discuss in this video by analyzing the business of the company, analyzing data, balance sheet of the company, and then we are going to speak about the price action, the intrinsic value, and the possible investment strategy. In fact, we are here as a value investor. All those analyses are done by me or with the international value investor team I'm working with, and you can find just above in the link the playlist with all analysis that we have done with all other companies. So if you like value investing strategy, just click the like button to support the channel and subscribe if you have not done yet. But now let's start to speak about the business of the company. First of all, we are speaking about eHEALTH, ticker EHTH. What does this company do? This company is a broker, an insurance broker. In fact, from one side we have all customer, on the other side we have all insurance company, and just in the middle we have the broker that sells all the product from insurance company to the customers. This kind of broker could be many different. In this case, we are speaking about an internet platform. The advantages to use an internet platform, of course, are that we have less people to work with, so less cost for the company, and we can use all algorithms based on artificial intelligence and machine learning to learn always more about our customer and to give them some proposal that really fits their needs. But the platform is just the place where the customer directly purchase the product. But how the company bring customer to the platform? In this case, eHEALTH use different channels. We have TV advertisement, direct mail. The company works with SEO, and the company works even with some partnership, for example, with pharmacy retail. So many different channels that are all useful to bring customer to the platform and make them buy product directly from the platform. And the next big advantage to use this kind of platform is that customer can buy all different kind of product related to health. In fact, they can buy Medicare, they can buy individual and family, dental, vision, and even small businesses can buy directly on the platform. So there is a complete offer of many different products that is a really advantage compared to all peers. And how big is the market we are facing with? In fact, the market, the population of this market could be around 62 million of people, and if we consider a revenue of $270 for each customer, the total market is worth around $17 billion. So thinking about eHEALTH can reach a market share around 6–8%, then the revenue of the company will be up to $1 billion. It means that starting from the actual situation that is around $600 million, so the company has really the possibility to double their revenue in the next years. But then it's absolutely a matter of how much market share the company can reach, and this will be monitored during our time of investing in this company, because we need to be careful that the company still take market share. But the good news is that always many people are getting more confident in buy this kind of product directly on internet, on some internet platform. And generally speaking, we know that all millennials are absolutely confident with the all platforms. But the good news is that even the 65 plus age are becoming more confident. So the percentage is up from 59% in 2014 to 71% in 2019. And the most important data maybe is that the 44% of senior people think as internet as the main source when they are looking for some information and product about health. But now that we know that the company has the possibility to double their revenue, let's check if they are really delivering this kind of result and in which speed. Actually, speaking about number of people, the big step was from 2018 to 2019. Then, compared to 2020, we have a growth, but the percentage of our growth is not so high. And in fact, even speaking about revenue, we have a growth on 26%. That is still an high growth, but is not the one that the company used to be. So it's a really challenging time for this company because we have some really good news, as for example the growth on Medicare carried advertising revenue that growth from about 98%. But in the other hand, for example, we have net income that are less than 2019, and now we are going to explain why. So there are many different ideas, many different situations. Some are positive, some are negative, but here we are. There is two main things that have to be monitored careful when we are going to invest in this company. So the first things regard the retention rate. In fact, this kind of high growth company need to take care of their people, the customers that they gain, and the retention rate, it's really important because it's really impacting the expenses on advertising, for example. And now we are going to see why. And as long as the retention rate, the other thing that is really important to monitor is the cost management and reduction. In fact, we can see that net income went down, and if we go to see the income statement of the company, we can see that selling, general and administrative expenses went up from 400 million to 500 million. So the problem is not just the new investment that actually went up, but not so high. We have too many reasons for increasing of those costs. The first one concerns the number of people that are working in the company. In fact, in 2019 we have 1,000 people, in 2020 1,500, and in 2021 we have 2,000 people. So it's the double of people that used to be in 2019. And at the same time, with the high growth of revenue of the company, now the management should focus on managing the cost and the cost reduction in order to have the fixed cost that will be in percentage less and less compared to the revenue and net income. So at the end, for me, the two most important points if you go to invest in this kind of company is to monitor the retention rate of a customer and to monitor how good the management will be in managing the cost and cost reduction of this company. But I'm happy because the management seems to understand this kind of problem, and in fact a focus working area for 2021 is the organization of workforce. Organization means training to be more effective with the customer, and if it's work, this will solve at the same time both problem, retention, because the customer will feel more confident with the platform and the assistant person, and the rate rate of revenue growth, because an happier customer will be happier to spend more money with the platform. So with all those in mind, we can finally go to see the price action and which is my estimation of intrinsic value and the possible strategy of investment. First of all, we can see the price action, and we can see as in 2018 the price was around $16, then went up to $150, but it was really too exuberant. In fact, then the price went again down to around $70. But more than past, we need to understand what is going on in the present and in the future for this kind of business. So the first thing to say is this big drop down that we had in 29th of January. So this was because the target for this company went down, so the management expected to grow at a faster rate, but in fact in 2020 they didn't, so they needed to make a lower target for 2021 as well. But at the same time it comes with a good news. In fact, they have an agreement with HIG, that is an investment company, for 225 million. The management already said that all those money will be used to make the business grow faster. And according to my expectation, the target price on 2022 will be $105, and the target price in 2023 is $125. So this dark blue line here that link all those target price is my intrinsic value line, and we can see that the actual price at time of recording around $65, it's down 43% against intrinsic value, and is down 60% against target 2022, and is down 93% against target 2023. For sure, those are just my expectation based on what is my analysis, but is absolutely not a suggestion to invest. But the idea, as always, is to make your own investigation before investing. This is just a way to discuss me and you about the possible investment and which are pros and cons of all investments. But every stocks need to fit your own portfolio, your own risk, and your own financial goal. So let me know your thought about this kind of investment, this company, just down below in the comment. Remember that you can find just above the link with the playlist and all fundamental analysis that we have done in all other companies. And if you like this kind of video, just click the like button to support the channel and subscribe so to see the next videos. And finally, I want to remember that this company is already part of our portfolio. You can see our public portfolio. The link is just below in the description. I'm happy to have all questions and comments from you, and I'll see you in the next video.